Up next on U.S. Bank Business Watch, presented by the Cincinnati Business Courier, the last of a breed, why some Cincinnati doctors go it alone. New life for an historic Samuel Hannaford building in Over the Rhine. And a restaurant opening off I-71 this week is a first in Ohio. U.S. Bank Business Watch is next. Good morning. Welcome to U.S. Bank Business Watch. I'm Brian Patrick. On the Business Courier front page centerpiece this week, the last of a breed, why some Cincinnati doctors go it alone. Of Cincinnati's 1,100 plus primary care docs, there are only about a dozen who have a solo practice now. A new survey shows the solo model is fading fast. About 15% of all physicians across the country were practicing solo in 2013, compared with 21% in 2012, according to staffing firm Jackson Healthcare. And 55% of doctors said they worked either for a hospital or for a practice in which they had no ownership. Dr. Larry Wong, who has a solo practice in Terrace Park, is the exception.
I took over my dad's practice. My father was a family practitioner in Milford for 30 years. I grew up with it. We have patients that have seen us for 40 years now between the two of us. That's 5 to 6 generations of patients. So I inherited the business essentially. So long term, it's probably not viable. Short term, though, I think we can give it a go.
Not viable long term because Wong says the business model is challenging. Joining a network is a way to offload the administrative burden, ensure regular patient flow, and get access to costly technology, especially an electronic health record system. Dr. Dorothy Schaefer is an Avondale-based internist who's afraid a hospital system would push her to see too many patients. She gives attention to holistic medicine and has 300 persons on her waiting list. For profiles on some other local solo docs, be sure to read the full story in the print edition of this week's Business Courier. Well, some cuts made to the city of Cincinnati budget in May are now being restored. Citing an increase in revenue from 2013, 6 Cincinnati City Council members said they will restore funding for all positions that had been eliminated.
Good news is that the local economy has been recovering. Another piece of very good news is that the city's strategy of investing in jobs and development is paying off. It is producing higher than anticipated revenues.
The city received about $10 million more than expected for the 2013 fiscal year, mostly from increased income tax receipts. The council majority wants to restore $3.8 million of the $20.4 million in cuts. For a full list on how the new dollars are being shared, read the full story on our website. Well, another historic building is starting a new life in Over the Rhine. The Hummel Building at 14th and Elm, adjacent to Music Hall, was built in 1878. It now houses 4 condominiums and space for a restaurant. This after a $1.6 million renovation by Grandin Properties that was not without its challenges.
An enormous number of challenges. I mean, floors weren't level. We had to gut the entire inside. And the team that really worked on it was absolutely superb.
Like Music Hall, the Hummel was originally developed by architect Samuel Hannaford and contractor George Hummel. Well, the Cincinnati Art Museum is ready to complete the second half of its renovation, but it needs more funding. The museum in Eden Park has delayed work on its main building for 90 days to allow more fundraising for the nearly $6 million project. So far, $2.7 million has been raised to convert space into more galleries that will add room to display more of the museum's collections. About $3 million is still needed. The Art Museum staff is starting a fundraising effort that will look beyond its major donors to the general public to help fund the next phase of the development. A tiny liberal arts school in central Kentucky has landed one of the largest donations ever to a U.S. college or university. Center College in Danville announced the gift of stocks worth $250 million from the A. Eugene Brockman Charitable Trust. The school says it will use the money to set up scholarships in science, computer science, and economics. Center College may be best known for hosting vice presidential debates in 2000 and 2012. The Cincinnati Zoo and Botanical Gardens has an economic impact on our community of $143 million. According to the University of Cincinnati Economic Center, the zoo's world-class reputation draws visitors to the area who spend at the zoo itself, at hotels, dining, and other attractions. In 2012, the zoo reached a record 1.4 million visitors. The zoo's other benefits to the community include employing more than 1,700 people, resulting in nearly $52 million in annual wages and benefits. The owner of a local recruiting firm has a message for employers and employees. Things have changed. Tom Gilman owns Baldwin Gilman LLC. He says since the recession, many companies seem to have forgotten they need to recruit, and employees need to rethink how they get noticed.
Proper way to approach a job search is really to target the companies or types of companies that you want to work for, and then network your way into those, rather than to post your resume online.
While the job market still has a way to go, Gilman says he is confident that things are looking up. Another new restaurant opens at Rookwood Development in Norwood on Thursday. Capital Grille scheduled to open its first location in the state of Ohio at the Rookwood Exchange on Thursday, August 8th. The dinner menu at Capital Grille includes lobster mac and cheese, seared citrus glazed salmon, and bone-in aged sirloin, as well as more than 350 wines. The chef says it is targeting a special clientele.
The surrounding businesses, be it retail or service businesses, they cater to the clientele that we're looking at, those discerning people who are looking for the finer things.
The Capital Grille will be open 7 days a week for lunch as well as dinner. Small businesses are the lifeblood of our community. Coming up on August 27th at Music Hall, the Gehring Center at UC's College of Business will present the Family and Private Business Awards. For more on the awards and what to expect, Business Courier publisher Jamie Smith is joined by Larry Grip, president of the Gehring Center. They're in our studio. Jamie and Larry.
Thanks, Brian. Larry, thanks for being here today. I think this marks the 14th year for the Gehring Center Family and Private Business Awards, correct?
That is correct.
And this will be the 3rd year that we've given out a special award, the Hall of Fame Award. Talk a little bit more about that Hall of Fame Award for me.
Well, the Gehring Center, Jamie, has been in operation for well over 20 years. And so we've been able to observe and to interact, to provide education programs for many, many of the family businesses in our region. And we noticed that there wasn't a particular award to recognize those companies that have made a long-term contribution to our community. So the idea was to create the Greater Cincinnati Family Business Hall of Fame, and so that's what we did 3 years ago.
Excellent. Tell me a little bit about the criteria. You know, how do you evaluate what makes them a winner?
Well, what we do is we ask our Board of Advisors to give us nominations based on 4 criteria. And the first is that the company, and in this case this year, the Castellini companies, we look at how much have they grown employment in the region since they've been in operation and during the recent past. And then we look at, have they improved the image of our region, of the city. We look at their community engagement and involvement. How much do their people get engaged to help us have a better community? And then the last is we consider philanthropy.
Okay, that's great. What made Castellini shine this year?
What didn't make them shine, Jamie?
They hit all 4 categories
They
pretty
hit
well,
it
huh?
out of the park, as they would say, in all 4 categories.
Right.
It's obvious that the history of that company, which is magnificent, starting as a produce company that almost failed twice, had hazards in their business. They continued to grow their business, and then adding the Reds. And we know the story of how the Castellinis don't take any money out of the Reds. They view it as a community asset. And think of the reputation of Cincinnati, of our region, in the country because of the Reds and the fact that they're still here.
They're here. That's
How
great.
could we not choose the Castellini company?
Well, I can't wait to hear more about them and the other great businesses that on August 27th on full screen right now we have have the date, we have the Family Business Center's website that they can go and find out more information or RSVP. So thanks for being here today, and we look forward to seeing it.
Thanks, Jamie.
Brian, back to you.
Larry and Jamie, thanks, and it's good to see the Castellinis honored. Up next on U.S. Bank Business Watch, a new tenant for a long-stalled project off I-71. And some good news today if you're looking to take out a student loan. Here's some news you might have missed if you're not reading the Business Courier online every day. Kenwood Collection announces its first new office tenant. East Lukens, one of Cincinnati's largest insurance agency, will move into the long-stalled development off I-71 in the spring of 2015. The insurance agency leased more than 30,000 square feet of office space. College students will pay a fixed interest on loans taken out this year. The Senate approved a bill that calls for not increasing the interest rate on student loans. President Obama endorsed that legislation, so he is very likely to sign it into law. Supporters say the market-based plan ends the game of Congress playing politics with student loan interest rates at the expense of students' futures. The owner of the Cleveland Cavaliers is teaming up with Chore Monster, the popular parenting app that we featured here on the program. They received $1.5 million in new capital led by a venture firm co-founded by Detroit executive and Cleveland Cavaliers owner Dan Gilbert. That funding represents Chore Monster's first investment from outside of the Cincinnati region, and it brings the startup's total cash raised to $2.28 million. Now in this morning's U.S. Bank Economic 360, we're talking about the so-called Great Rotation. That is, the great rotation of assets leaving bond investments and going into stock investments. It's been long anticipated and much hype, but so far has proven to be only mythical. Mike Denneman, Vice President and Senior Portfolio Manager at U.S. Bank, joins us this morning with more. Mike, good morning.
Good morning, Brian.
Good to have you with us. So since the economic crisis of 2008, individual investors seem to have favored bonds over stocks. Kind of give us an idea of where that's playing out.
Sure. Well, and that's only natural, of course. When economic difficulties arise, investors tend to gravitate towards safe investments rather than risky ones. But that's typically a short-term phenomenon. As the crisis fades, investors will leave bonds and move back into stocks, the so-called Great Rotation, as you mentioned. But what's unique here is that we're almost 5 years past the crisis, and investors are still favoring bonds over stocks. And when you put that in context of A, the stock market being on a great run, and B, bond investments paying very low yields, you would think that investors would have every incentive to ditch bonds and move into stocks. So the fact that that hasn't happened yet, I think, pretty well outlines the mindset of the average investor, which is to avoid risk and continue to embrace conservative, safe investments.
That's very strange, and you wonder how much money people didn't make by not going into bonds during this big spike in the market. Is this a big deal for the stock market?
It could be. I mean, if you think about if the rotation were to happen, just the sheer size, the billions of dollars that would move from bonds to stocks would, just through the law of supply and demand, push the stock market higher. So you see a lot of market pundits claiming that this would be a great, maybe second wind even for the stock market, and count this rotation, if it were to happen, as just one more reason to be bullish on stocks.
Well, they say to buy low and sell high, so it's been high. Maybe that's why people are avoiding buying. What have we seen in this area recently? Is the rotation increasing at all?
Well, we got a bit of a hint of a rotation a couple months ago when Ben Bernanke started talking about higher interest rates. That spooked some bond investors, and we saw money flowing out of bonds. But it didn't take that next step and move into stocks. It went into cash or into money market funds. So we got almost a half rotation, if you will. And since then, we've seen that money moving again, but in fact back into bonds rather than into stocks. So that really calls into question whether or not the so-called Great Rotation is even on the horizon. And it may be a more permanent situation than we think. Investors sticking with bonds because they simply don't want to take on the risk that's represented by the stock market.
So this idea of Great Rotation, have we seen that before in the cycle of the markets, or is this something relatively new?
It's not new. It happens every time we have a large recession or a financial crisis. But it's, you know, each one is different, each one is unique, and I think the severity of the financial crisis of 2008 has a lot to do with this reluctance by individual investors to re-embrace the stock market.
So do you think this is the end of the great rotation, that it's pretty much passé now?
You never know.
You never know. You gonna watch it for us?
I will.
I appreciate it. We appreciate you, Mike, and U.S. Bank. Thank you.
Thank you.
Still to come on U.S. Bank Business Watch, more evidence measured by dollars that Cincinnati is the place to be for startups. That's right, the place to be. We have the president of Cincy Tech joining us in the studio next, Bob Coy. A national conference that aims to unite the startup community outside Silicon Valley is coming to Cincinnati's Duke Energy Convention Center September 29th to October 1st. It's called Everywhere Else Cincinnati. The event includes 2 full days of content from nationally recognized speakers, 3 parties, and a pitch competition. It's targeted to entrepreneurs who often feel alone as they create startups outside hotspot Silicon Valley. Cincinnati's reputation as a haven for startups is growing, and with very good reason. Some great news late last week from Cincy Tech. The downtown early stage investor has closed its 3rd seed fund. The $11 million fund is Cincy Tech's largest to date and has the capacity to invest in at least 15 local tech startups. Cincy Tech Fund 3 combines $5 million of state money from Ohio, Third Frontier, with $6 million raised locally from institutions and private investors. 51 individual investors have committed to invest in Fund 3. That's up dramatically from 9 in Cincy Tech's previous fund. Since 2007, Cincy Tech portfolio companies have created 390 jobs and attracted $228 million in follow-on capital and outside funding. Cincy Tech's president, Bob Coy, is with Business Courier editor Rob Dahlmeyer in the studio with more on Fund 3 and its impact on our community. Rob and Bob?
Brian, thanks. Bob, thanks for being here. Congratulations, your biggest fund so far. Has to be a good feeling for you to get that wrapped up.
It's a very good feeling. Thank you.
Brian touched on where the money comes from, but maybe you could be a little more specific and talk about specifically where the money comes from, who is a part of this, and then how you decide where you put the money.
Well, as you know, Cincy Tech invests only in Southwest Ohio. And our investors are investing in us because they want a return, but they also care deeply about the future of this region's economy, and they see entrepreneurship as a key to that future. So our institutional investors include well-known organizations in town like Cincinnati Children's Hospital, the Health Foundation of Greater Cincinnati, the Greater Cincinnati Foundation, all investing, not grants, giving us grants. And then we have 51 individual investors who are high net worth individuals who almost all are successful business people themselves, who invest a minimum of $50,000 up to $200,000 in the fund. And they provide not just capital, but many of them are also interested in helping us to evaluate the opportunities and also serving on the boards of these companies.
Now, you said it yourself, this is not a grant, these are investments, which means they're hoping to get their money back.
Correct.
Maybe even more than that. So how do they decide what's right, and how do you guys decide where to put this money? You said these people that are, these individuals can sort of help that process, but what is that process? Are you interviewing companies? Are you interviewing people?
Yes, we have an investment focus, first of all, and our investment focus are startup companies that are either IT related or bioscience related. We'll also look at like advanced materials companies and advanced energy companies, but most of the deal flow that we see from this region is in the IT space or in the life sciences space. So when we evaluate an opportunity, it has to be what we would consider to be a high potential opportunity, which means that it generally has an intellectual anchor, whether it's intellectual property or a founder who knows the industry deeply. It has to have an addressable market of at least $250 million a year. And we have to believe that we can bring other investors along with us, because when we invest, we don't invest alone. We'll form a syndicate. So we'll do the due diligence, we'll provide some technical assistance and mentoring, we'll convince ourselves perhaps that we should invest, but then we have to go out and find other investors and convince them to invest as well before we invest. So there's a sort of two sets of eyes, so to speak, looking at this before we make an investment.
So your original goal was $6 million. You reached $11 million. Actually, we thought it was a little less than $11 million the other day. Now it's $11 million. Actually got 53 individual investors now instead of 51.
Correct.
What's happening? Why are you doing better than even your goals set aside for yourself?
Well, I think it's it's a combination of things, but primarily it's that the companies in our first two funds, many of the companies in the first two funds are doing very well. We've had one exit to date that returned 12 times capital to our investors. We have another of other very promising companies in the portfolio that should exit within the next year or two. So initially, I think that in our first fund, we didn't have any individual investors, and they were all institutions like Cincinnati Children's Hospital, the Health Foundation, Fort Washington Capital Partners. And I think that those institutions did it hoping that we would succeed, but feeling like this is good for the community and we should try. And they took the initial risk. But with individual investors, they look at it differently. They care about the community, but it's their own money, and so they really care that they get it. They want it back with some return. So I think it's the performance of the first two funds that has brought those more individuals to the table.
Well, congrats on the third fund, and hopefully we'll see bigger and better things to come, but first you have to figure out how to spend this. But thanks for being here.
Thanks very much, Rob.
Brian, back to you.
All right, Bob and Rob, very exciting. Thank you for joining us this morning for U.S. Bank Business Watch. We will be back next Sunday and every Sunday morning, 6:30 here on Local 12, 10 a.m. on the CW. For more business news all during the week, you can visit the Business Courier online and just sign up for our daily emails. That address online, CincinnatiBusinessCourier.com. For all of us at U.S. Bank Business Watch, I'm Brian Patrick. Have a great Sunday and a good week.